we were looking, for example, at the euro dollar, if you recall, and we had a price point of 147.18. If you remember from last week when we were talking about the euro dollar, and together we have identified a point on the chart where we said that this is a point, a decision-making point, or what we call a structural point. And this was from last week. Most of you were there. And we said that the number was the 147.18. And at that point, we were looking, this was the last time we did the last seminar, and which was on the 10th. And this was the 147.18, and we have agreed that if it fails below the 147.18, then that would be a failure setup, and we should be looking for a capitulation or a big sell-off. And this is where we are today. We have moved from the 147.18, which was last week, what we did together, and we have identified it together live in the room, to 143.62. So you had about 350 pips sell-off, which within a week you would have made that amount of money on a one contract. Now, so this is what we are trying to do, is to look at the price points or the significant points, and at these decision-making points, we want to know how the traders are going to act. They are supposed to be, like what we said last week, at the 147.18. At this point in time, they had three choices. A choice of sitting at the 147.18 and doing nothing, which is fair, okay? And we don't have a decisive move, so we're waiting at the 147.18. And if it does trade below the 147.18, we are going to go short. And if it holds above the 147.18, we can go long, and we can place our stop below the 147.18. Now take a look at this day here, which was the 10th. As you see on the 10th, we have traded below the 147.18, and then we turned around. We failed to hold the 147.18, and the result immediately, I mean, I want you to look at that day, which is the 11th. Okay? Take a look at the 11th day here, because I'm going to walk you through this trade now twice. I'll show you this in the euro, and I'm showing you the euro is because we have identified it together last week. So if you look at that big red candle here, which is on the 11th, you would see that the market has, or basically was trading on Friday, last Friday, above the 147.18, and it started pushing higher. So at that moment in time, you will be looking to be a buyer, and you will be placing your stop and reverse right below the 147.18. And this here, if you would have scratched the trade, the long trade, and you would have taken just the short trade, now that here, and you would see as soon as it came below the 147.18, you had this capitulation. Why did we have this capitulation? Okay guys, let's because this session is recorded, so hold your questions until the end of the session. I will open it, and then I will answer all your questions. So the way we do that, the way we identify that these points is that we look at what we call the price structure. The chart is made like a building, and it's built on structure. And these structural points, you will see them mostly in my charts with ellipses around them. So this, for example, is a structural point. This is a structural point to the upside. And you would see me, again, this is an explanation that we go through. I will show you, for example, on a different chart. But the 147.18 is one of the price points that goes all the way back. Now, as soon as it breaks or it fails to hold these structural points, then at that moment in time, all the traders that went long above this point are going to reverse and get out of this trade and actually go and take a trade into the opposite direction. The reason is most traders, most professional traders have reasons why they get into the trade. And when you go long, you have to go long for a specific reason. And as long as this reason stays, as long as this reason has not been negated, then there is no reason for you either to get out of the trade or to reverse and go into the opposite direction. So we had a buy above the 147.18 on Friday, and if it failed below and came back below the 147.18, then we are going to close our long. We're going to get stopped of our long at a scratch, reverse, and take it to the downside. And that kind of reversal is a trade that you would take and you stay in it for a long period of time. Allow it to work. Give it time now to mature, because these are the trades that are going to pay us the most.